So in today's discussion, I'm going to be showing you a couple of different options on how to put in some government loans. We're going to cover an FHA loan, we'll cover VA loans and USDA loans, and give you a couple tips and tricks on how to do this inside Edge. And you should note that these are great for a couple of different reasons. You can use them for your open house flyer presentations when you want to show, obviously a couple different loan options against each other. If you're going to show one type of government loan, it's also, it's always a good idea to show another type out there just in case, because you never know who's going to actually see that presentation. It may be somebody that would qualify for a VA loan or something like that, and if you don't cover it on your presentation, you may lose the interest of that person. But you can do these, as I said, on open house flyers. You can do them as a total cost analysis, which is what I'm going to show you today. Primarily, I'm showing you that way so we can break it down and we can really see the costs over time for each one of these types of loans. So for this one, I'm going to make this a marketing report, and I'm just going to call it Government Loan Options. And for my friendly name, I really don't need one because I made this as a marketing report, but if I was going to do multiple reports under this one, I definitely want to tag a friendly name so I could identify this later. Again, for this case, it's a marketing report. Really don't need that. So I'm going to check the purchase a new home goal, and the reason I'm doing that is because I don't want to be asked for current mortgage information. Anytime you're doing a purchase, make sure to check this box. It's going to reduce the amount of screens you have to go through inside Edge. Now the only part I really need to fill in on this screen is going to be my property value. This is the same thing as purchase price here in Edge. So let's say this is a $300,000 loan. And then because it's a marketing report, I don't have any of this information, so I'm not going to put anything in here. I'm just going to skip right through it and head straight over to products. Now for the first product, I'm going to show an FHA with 3.5% down. And obviously we want to keep the refi switch toggled to no. This is going to be a purchase. And then I'm going to toggle the FHA question to yes. Now at that point, notice that you can jump back and forth between doing the data entry numerically on the left side or as a percentage on the right by clicking this button here in the middle. I'll put in my 3.5% down. See that I can get them a 4.5% interest rate right now on a 30-year term. Now because I marked this flag FHA equals yes, when I get to the next screen, it's going to ask me for the upfront MIP. So you can see at the bottom of my closing cost detail, we have an upfront MIP section. This can be entered again as a percentage. And then you can finance it in. Now obviously I'd want to apply a closing cost template as well. You have the option, of course, to do them as ballpark fees if you'd like, or you can pull in one of your templates. So I will pull in my FHA 3.5% down template, make any modifications that I see fit. For instance, if there wasn't a contribution on this one, I'd want to pull that out, and then hit apply to loan. Now I need to enter my monthly escrows, so I'll put these in as percentages. And then mortgage insurance, this is very specific to FHA here. We've got a couple of factors we need to consider for mortgage insurance. One of them is we need to put in the right mortgage insurance factor. That's 1.35 because this is a high LTV loan. We do want it to calculate the MI based on the balance every year. Per FHA guidelines, it's supposed to do this. But because this is one of those high LTV loans, this has to carry mortgage insurance for the life of the loan. So I'm going to use 360 as my MI cutoff month. Now, if you choose tax deductible, and MI is still tax deductible right now, it's quite all right to do that, but it's not going to show a tax benefit unless you go back to the assumptions area and indicate a tax bracket for your borrower. This is a marketing report, so if I was going to do this, I'd probably have to guess at kind of a median range of the target I'm going for. So if I check this box, I'm going to go back into my affordability section, and I'll enter a tax bracket of, say, 25%. That way when it shows the tax benefit on my report, it'll be based on that 25%. Of course, the parts that actually get factored into the tax benefit are the monthly property tax, the monthly interest they're paying, and if you check the box like I did here, the monthly mortgage insurance. So I've got my FHA one done. Let's throw in a VA loan real quick. And I see there's a couple of questions real quick. Charlie's question, should the cutoff MI for percentage be 0? Actually, because we're doing 360 months here, this really doesn't come into play. The way it works in Edge is that the cutoff month is the first variable that we look at. So, for instance, it used to be on FHA loans, they had to carry it for a minimum of 5 years. Then, if it was at 78%, it could drop. But in this case, it's never going to consider this LTV point because it's got to carry the MI for the life of the loan. So technically, I can leave this blank. It won't hurt anything to leave it blank, and then check the box again. Or you can have anything you want in there. It really won't come into play if you make the cutoff month the same as the term. But great question, Charlie. Thank you. Dennis's question, can you do a debt consolidation report in Edge? Absolutely, Dennis. We'll do that as soon as we finish our government loan discussion, and we'll show you that. Okay, so for my second product, this is going to be my VA loan, and this is going to be a 0 down. Now I'm going to use the copy button so I don't have to redo a lot of the work I did for things like the monthly escrows. So I'll hit copy from, and I'm going to copy that FHA 3.5% down. Now all I'm going to do here is instead of the 3.5%, this is going to be a 0 down payment. Now one thing to note, Edge is going to produce an exclamation point on the products category down here once I advance the screen. The reason it's going to do that is because we've got a 0 in the down payment field. But it's okay. This is one of those cases where the exclamation point is quite all right. Anytime you're doing 100% financing, you are going to get that exclamation point. So don't worry too much about it. And let's say that we can get 4.625 on this VA loan. I'll leave the term the same. If I needed to make any edits to my closing costs, I'd want to jump back into the detail here and edit the specific fees. But I also need to consider the upfront MIP. Now, for a VA loan, this actually isn't upfront MIP. It's a funding fee. But we're going to use the same placeholder for it. So what I'll do is I'll put my 2.2%, and I will finance it on top of the loan by checking the box. Now, the hazard insurance and the property tax are already done, so I don't need to do anything with those. But I need to make sure and get rid of my mortgage insurance. So we'll 0 that out. And then it doesn't matter what we leave in the cutoff points here. So that's our VA loan. You can see it was very similar data entry to the FHA. All I did was basically remove a couple of variables that the VA loan doesn't require. And now I'm going to go into a USDA loan. Now, one thing to remember, 100% financing is possible under USDA as well. So if I'm going to show a 0 down on the VA, I'm probably going to show it on the USDA too. Something to consider as well, if it's a disabled vet, they don't have to pay the funding fee, so we wouldn't have to put that in. And I'm sorry, earlier I misspoke. I said that on the VA loan, that was the funding fee. That's actually a guarantee fee, so, and I might have those backwards, I'm sorry. Guarantee fee is USDA. My mistake. All right, so I was in the right direction after all. So ideally, you have a fee that's going to be an upfront fee. Usually it's going to be a mortgage insurance fee. Sometimes it can be a guarantee fee, a funding fee, whatever you're going to call it. It has the exact same impact on the loan. It can be financed in and is an APR fee, so we can use that field no matter what it is. So we'll do our USDA one now. And again, I'm going to do the copy from. I'll copy that FHA loan. And I will put in my 0% down. And let's say that I've got that 4.625 again. And then I need to make sure and edit my upfront fee. So we're going to use our 2% there. We'll add that to the loan amount. Hazard and taxes are good. So all we need to deal with is the monthly MI. And this actually works out to 0.4. And it does recalculate on the balance every year. As far as I know, it does last for the life of the loan, but there may be programs out there that will allow an early cutoff on that, so you want to check into your guidelines for it. But for this case study, I'm going to say it carries for the life of the loan, just like the FHA does. All right, so I've got my 3 different types of loans in there, and you can see when I go to the analysis screen, I can tell the FHA is definitely going to be the highest cost loan, and over time, it still remains the highest cost loan. So when I'm looking at this, obviously, if I'm pitching this to my client, the whole reason I'm even showing them the FHA loan is because they may not be able to qualify for a VA loan. They may not have anything that can qualify for the USDA loan. So we want to make sure they have an option. In fact, I might even put a 4th option here that just shows a conventional loan with maybe 5% down. Tony's question real quick. He says, I noticed that you had both boxes checked on the MI section. When do you check and when do you not check them? Great question, Tony. So what Tony's talking about is these 2 boxes right here. Now, Calc MI on balance, what that means is that every year this MI payment is going to be recalculated based on the current balance. Now, most government loans do require this. I know FHA definitely requires it. VA and USDA definitely require it. So it's going to lead to a declining payment over time. So at the end of the loan, it's going to be a ridiculously low MI payment. This will be something like $3.40 at the end of the amortization. Now, when you're doing conventional loans, you never check this box. So this Calc MI on balance is only for government loans. Now, MI tax deductible, that's up to you in terms of checking it. If you are going to show a tax benefit and you want to include MI as a tax deductible item, you would go ahead and check this box. It is still tax deductible, but they vote on it every year, so it may change over in the over the recent future here. Jim's question, can you advise on how best to install Edge presentations on a website? I've been building my own website for the last several months. Lots of problems learning the video piece, but I'm ready to start including Edge presentations as examples of different mortgage strategies. I know I can show the link, but I think this takes the viewer away from the website. Another option would be to make my own video and screen capture and voice narration. What is your recommendation? I would say, Jim, you're absolutely right. If you do include it as a link, it is going to direct them away from your page. And there's no way to really iframe it into your page so it stays on there. So I would say that probably your best bet is going to be to go ahead and do that screen capture recording and then embed that video on your page so it plays on there. Now, YouTube is actually great for this. If you guys have seen our support center, that's actually the process I use. So here, let me hit help here and show you that. So for instance, when we look at one of these tabs like the Rate Watch Setup Guide, you can see that I've got the direct link to YouTube here at the top, but I've also got an embedded video. So this is going to play on the same page without having to take the person off the page. So Jim, what you'll need to look into is embedding video on your page. Depending on what kind of a web builder you're using, it probably has a function that's very easy to use on there. Oftentimes, actually, you can go straight to YouTube, and there's a share option, which will give you an embed link that you can put in your page. I know this is probably a little above and beyond what most people are looking for, but I will show you this real quick so you can see what it looks like. So in my builder, what I'm doing is I am iframing in my YouTube video so that it's part of the page. So I know this probably doesn't mean much to most of you. However, if you are designing a site and you're looking to embed, this is the optimal way to do it. All right, so let's get back over into Edge, and I see there's a couple more questions before I proceed to the analysis screen. Dennis's question, when reflecting a contribution in the closing cost summary page, will reflect a negative number in either APR or non-APR. It does not, and I think there's a typo there, Dennis. I think he's trying to say it doesn't affect the total numbers. So there's two ways to do a contribution, and what Dennis is talking about is when you do a contribution from inside the closing cost detail here, it's going to apply that contribution either to the APR cost or the non-APR cost, depending on how you indicate that contribution. And if it's more than what these costs are, it will end up showing a negative number down here. Now the totals will still be correct, but you've got to make sure you do the contribution correctly. So let me show you a couple of ways to do it. So the first way to do a contribution, and this is probably the easiest way, is just hit Add Fee. And then in this drop-down, we've actually got one in here called Contribution. So if you type a C in the drop-down, you'll see it in here. Now this one has logic built into it. This one, Edge knows it's supposed to take whatever amount you put in here and knock down the closing costs with it. So if I had a $1,000 contribution that was, let's say this was a seller contribution, that's going to knock down my cash to close by $1,000. Now, because I have the APR box unchecked, it's going to knock down the non-APR fees. So if my non-APR fees are less than that amount, it is going to show a negative number on the totals. Now, the whole reason it does that is because we want to make sure that we don't screw up your APR. If your contribution is supposed to be a non-APR contribution, even if it actually covers some of the fees that were APR fees, the APR still requires them to be disclosed as APR fees. So we want to make sure that when you're going to get your calculated APR, it matches what your origination system is trying to do. Now there are some programs in which you can do a contribution that goes to APR fees. If that's the case, check the APR box and it will go to the appropriate area. Now if you find that that negative number in one of those fields is a little difficult to explain, what you can do is you can break this up into two contributions. So let's say that, I have, and let's go back real quick so I can find out how much I have. So right now I have $910 in non-APR costs. So if I don't want to produce a negative number here, I need to split this into two contributions. One that's $910 that's non-APR, and one that's $90 that is APR. So it's just going to knock this number down by $90. It'll knock this number down to 0. So that might be a good workaround for you, Tony. The other way you can show a contribution, and I find that a lot of people like to use this function because it doesn't just use the contribution name. Instead, you can actually name it what you want to name it. For that, you would hit Add Custom Fee. And we would call this something like Seller Contribution, or even Seller Concession, whatever you want to call it, and then hit OK. Now once you've got that in there, because this is a custom fee, it doesn't have the same logic as that other contribution field that we built in there for you. So what you would have to do is make this a negative number and then leave it as borrower paid. So what this effectively does is it reduces the borrower paid costs by that $1,000. So that might be another good workaround for you, Tony. Both options will produce, the exact same numbers in terms of cash to close. It's just how you like to see it displayed on your report. Do you like to see the full name of what that contribution is, or are you looking for ease of use, select the one we have and just pop it in there? Both will work though. All right, so let me cancel out of there. And I'm sorry, that was Dennis, not Tony, that was asking on that one. But Tony has another question. He says, is there a video on the closing cost template? I have some built, but they seem not to work well most of the time, especially when I add things to the scenario. Absolutely. So back in our support center here, if we go to the knowledge base, you can always type in whatever your search is. So for instance, just put closing and hit search. So there's all kinds of things that go into closing. In this case, I happen to know that the video is about, it's called fee templates, so I'm going to use the word fee. So there's one here called how to create and use fee templates. This takes you through the entire process of, which fees to use, what kind of templates to create. It gives you some guidelines on how many you really should be looking to have depending on how many programs you support. It also shows you how to separate these by state. If you're actually originating in multiple states and you have different fee templates for different states, you can differentiate these. Now, when you're watching this, I would also recommend that you also copy, or also check this one, how to copy fee templates in Edge. This is a fairly new function that we got into Edge a couple of months ago, and it's going to really reduce the amount of legwork you have to do the data entry from your settings area. All right, and actually referencing our question from before, how do I key in a contribution or credit? This shows you both of those areas that I was talking about a moment ago in terms of either selecting the stock contribution or doing your own custom contribution. All right. So let's finish up our government loan presentation real quick here. If I'm looking at the analysis screen, I see that there's a definite difference in how much they're going to pay per month. Now, if I'm putting this out, I'm probably going to want to show a reinvestment of some kind on these. Now, depending on what my angle is, I could be using this extra money to pay off the loan faster. I could be using it to accumulate wealth over time. Now, the FHA 3.5% requires a down payment, whereas the other ones don't. So I happen to know by looking at my FHA. Give me a second here. There we go. I happen to know that down payment is $10,500. So this VA option and the USDA option wouldn't require that. So what I'm going to do is I'm going to take that $10,500, I'm going to put it in my savings account. And let's say that that's going at a 0.25% rate. Now the whole reason I'm doing that is because Edge has logic in it in the analysis screen to subtract the cash to close from the total. So for instance, adjust reinvestment strategy here. And I'm actually going to need to boost this a bit because my cash to close with all the fees is 13,060. So I'm going to boost up my savings balance to cover that. Now, the whole reason I'm doing this is I want to make sure that this is an apples-to-apples comparison in terms of cash flow over time. So when I go to my adjust reinvestment strategy and I look at that area in the middle here, you can see that my beginning savings balance with all these loans is exactly the same. I have $13,000 in the bank. Now, depending on how much it costs me to close, I have a new adjusted start balance after close. That's going to continue accruing at the same rate as it was before, and at the end of 15 years, I'll have a little bit more money in there. Now, this means that no matter what, in each situation, I'm accounting for all the money in the account. Now, what do I need to do to make sure that my monthlies are also equal? I need to reinvest those monies. So $241.86, I'm going to put that straight back into their savings account. And then for the next one, $144.94. And you can see when I do that, now I'm showing a pretty large chunk of money at the 15-year point. And this is showing my borrower, this is the same payment across the board for any of these. But how much do you end up with over time? You know, with the FHA loan, you're obviously carrying MI for the life of the loan. It's never going to drop. You've got a fairly high payment. Whereas these other ones show lower payments. So I want to show what that money does over time instead of just throwing it into the wind. So Carrie's question real quick. She says savings start doesn't equal savings balance. So what it is the savings balance is before the loan closes. So this is you know, what the borrower has in their savings account right now. Savings start is the new savings balance after close. All right, perfect. So because I'm doing accumulation there, I'm showing an increase in their assets. I want to make sure for my long term to show the total net worth. Now, the total net worth is comprised of their total equity at this point, plus any asset accumulation you've developed for them. So in this case, obviously at the 15-year point, we've got a significant chunk in the bank on this VA loan because it's saving the most per month. Since I've been reinvesting that straight back into the savings the entire time, I've got a pretty marked disparity between the net worth on these products. So now that I've got all my metrics straight, because it's a marketing report, I really don't need any property address or anything like this, so I'm going to skip that area. And the last step is generate the total cost. Now, I do have payment notes down here, and I purposely leave them like this so that I change this on a case-by-case basis. If I was doing a presentation that doesn't have any of my monthly escrows because I just wanted to show P&I payments against each other, I'd want to modify this to say they're not included in the payment. Now, in this case, I did include them in the payment, so I am going to remove the are not part, and that one is ready to go. And then this just gives you an option to review the same metrics you were looking back in the analysis screen. If you want to add any additional color around what these are, you can feel free to type into these boxes. And then last step, put on a quote date. Make sure you've got a quote date on there. Anytime you're going to put out a piece like this, you want to make sure that the rates match the date. And then generate your link. Now this link is ready to be sent out as is, but I would advise that for any marketing presentation, you also add an audio-video segment to it so that you can review what this presentation is and so that you can capture the lead. This presentation might get passed around, especially if you're posting it on your website, if you're posting it on Facebook. It could get passed around and you're not going to know who clicks on it. All you're going to know is that people have been clicking on it. So the best way to make sure that your advice follows the report is add audio video on here. All right, let's answer a couple more questions and then we'll get into a debt consolidation report. Pat's question, does the long-term savings include the closing costs or only interest in MI? So great question. In the analysis screen, this long-term area, when you're looking at just total interest in MI, that's all it is. This does not include the closing costs. Now, you bring up a great point because the middle section here does include the closing costs, so it's a little bit different metric. This one is basically the area that allows you to find a break-even point when you're doing a refinance, so you can find out when that point comes that they've saved enough interest in MI to overcome the closing costs. So that's why we include it in the short-term area, but the long-term is strictly just total interest in MI if you select this option. Net worth, as I said before, that's going to be total equity plus liquid assets, and then total principal paid, exactly what you think it is, how much principal have they paid over time on each of these loans. All right. Dennis's question, on loans with MI, when Edge calculates loan payments, does Edge assume the payment drops when MI falls off and that the payment is not being used to pay down the principal? So it doesn't make any assumptions about what to do with that money after drop-off. So the way you'd want to handle this, Dennis, is if you're doing a conventional loan, let's say it's at like 84% right now, you know in about 4 or 5 years it's going to drop off. Edge lists where the cutoff month is for you for the MI, so it shows you where this is going to cut off. Now, naturally, my loans here, I'm carrying for the life of the loan, so it's not a reinvestment option for me. But let's say that my MI was going to be dropping off in 60 months. I can tailor this by double-clicking on it. And I can add a variable, say I'll add a line item. At month 60, I'm going to reapply that MI. Let's say it was $100 of MI. So this payment now becomes $244.94. And then it'll carry on like that for the life of the loan going forward. This is kind of an interesting note. The last MI payment, $6.14 on this loan. So that's what it gets down to when it gets towards the end of the loan. But this customization is available for you to use anytime you want to reinvest MI after drop-off, or if you want to do a lump sum payment. A lump sum payment, let's say I knew I was coming into a $10,000 chunk of money that I wanted to put in my savings account, and that's going to happen at month 72. I'm going to add a line item, and at month 72, I'm going to put 10,000. Now, if I leave it just like this, it's going to assume 10,000 per month going forward after month 72. So I need to make sure and add an additional line item at month 73 that puts it back to what it should be. So now I'm indicating that months 1 through 59, my payment to my savings is $144.94. After my MI drops off, it becomes $244.94. At month 72, I have a lump sum payment. And at month 73, it goes back to my regular $244.94. And Dennis's question, he asked, does USDA have monthly MI for the life of the loan? When I was looking at the guidelines this morning, I'll show you what I was looking at actually. They have an annual fee of 0.4%. So that's where we're getting the MI from, and it is based on the remaining principal balance. I'm not seeing any cutoffs for this, so I'm assuming it goes for the life of the loan. But you definitely want to check this. Make sure to check your guidelines. Find out if it does indeed go for the life of the loan on the program that you're offering. But the ones I checked, definitely, they look like they're life of the loan. Charlie's question, wouldn't month 72 be $10,244.92? Yes, absolutely, Charlie. If you wanted to drill down into this and really make it spot on, you would in fact make that 72 the 10,000 lump sum payment plus that additional payment. So absolutely, perfectly correct. All right, so let's get out of here, and we'll get into a debt consolidation report. All right, so let's start a new client, and I'm just going to call it debt consolidation. Oops. Now this person does own, because I need to be able to do a refinance here to make this debt consolidation work, so I'm going to leave that as own. I'm not going to check the purchase option because that'll eliminate current mortgage, so I'm just going to check the debt consolidation one. And then I'm going to enter my current property value. And then now we're going to enter the details on their current note. So let's say they took this out a couple of years ago. And you don't have to be spot on with the first payment date. That does determine the freedom point on the loan, but if you don't know the exact date, guessing a year is perfectly acceptable. Just find a couple of years back around the same time as now and indicate that. So let's say that their original loan amount was $250. Actually, let's say it was less, so they have more equity to play with here. And they got that at a 5% rate on a 30-year term. So their remaining balance is currently $194.08. Now, if it's different than this, you can always write in whatever the actual remaining balance is, and it won't change your figures at all. I'm going to enter my escrows. Now, the key to this is we want to indicate how much they're paying for that monthly debt as well. Remember, we're doing a debt consolidation here. So let's say, just for the sake of keeping this simple, that we're just going to pay off one debt. It's going to be an auto loan. So I'm actually going to change this label, call it auto loan, and I'm going to say that this is a $250 a month cost to them. Now I'm not going to put any MI on this one. I've got a really low LTV already, so I'm going to leave that one alone. Now you can fill in the savings balance areas here. If you're doing a specific debt consolidation, you definitely want to get some of this information from your borrower. If you're just doing a marketing report like I am, we can probably leave this blank. And now I'm going to go into the new products. So product one will be just rate and term refi. And I'm going to toggle the refi switch to yes, and you can see it automatically brings in the correct payoff amount that matches my current balance on my current mortgage. And let's bring them down to 4.5, 30-year term. We'll apply a closing cost template. Make any modifications that you see fit. Obviously the reserves you're going to need to modify every time, so I usually leave these blank inside my templates so that I can just do the manual data entry every time. And loan origination too, probably going to be a little bit less on this one. And then I'll apply to loan. Alright, so monthly escrows, 0.35 again, 1.25. Now remember, the auto loan, because we're paying it off, we're not responsible for it anymore. So we're going to leave this as a 0. Now, and I'm sorry, this is the debt consolidation, so we do need to. This is actually the rate and term, so we're going to keep it in there. So hang tight for a second. That was a $250 amount. Okay, so this is without doing a debt consolidation. It's just a rate and term refi. Now I'm going to add another product that's going to be the consolidation. I'll call it payoff debt. And I'll use my copy button to copy the rate and term refi. Now I'm going to increase my base loan amount to cover whatever debt that is. So let's say it's a $10,000 loan. I'm going to make this $200,408. Now I've increased my loan amount. My interest rate is probably the same, but I also need to make sure I'm accounting for the debt payoff. So when I go into my closing cost detail, I'm going to indicate a new line item here, and you can use a custom fee to do this. Call this Payoff Auto Loan. Hit OK. And that is going to be a $10,000 fee. And this is critical. Mark it as a prepaid escrow. Prepaid escrows don't get factored into the short-term savings area. If I don't mark this fee is going to be factored into that short-term savings, and it's going to skew what my short-term area looks like. It's going to make it look like it's an additional cost to the borrower, which in fact it's not. They're just paying down a debt. So now I hit Apply to Loan. Since I copied all my hazard insurance and property tax are there, but I need to make sure and omit the auto loan payment now. Shannon's question real quick. She says, why didn't you not add fees to the loan? You're absolutely right. In this case, it's such a low LTV loan, I probably would add all those fees to the loan. And let me show you what she's talking about. The one I wouldn't add, of course, is going to be my auto loan payoff. So what she's saying is these would normally be added to the loan at this point. So we'll add them all. Oh, this is a lender paid fee, so we're not adding that to the loan. And this wouldn't be lender paid actually. So I would check all these boxes. It's going to increase my amount financed by the amount of the closing costs. And then the only thing we want to leave unchecked is going to be that $10,000 because we want that to come out of the loan proceeds. So we'll hit Apply to Loan. And I'd want to do it on my rate and term refi as well. Now, when you get into the higher LTV points where you need to make sure that your loan amount conforms to the guidelines and doesn't go over the LTV restrictions, you're going to find that you may sometimes not want to add all of them to the loan amount because it'll increase the amount financed over the top. So just keep that in the back of your head. Now, because I did that, this is going to be a zero cash to close loan, this rate and term refi. The payoff debt one will also be a zero cash to close loan. All right, so let's see what these look like in the analysis screen. So we'll go to Adjust Reinvestment Strategy. And you can see my cash to close is 0 across the board, so I know I've done that correctly. Now I need to tailor an investment strategy for this additional money. Now whether it's, we want to pay down their loan faster, maybe we want to split it up, so part of it's going into the principal reduction and part of it's going into a new investment account. Completely up to you in terms of how you want to do it. I'll show you the investment account for this one. Let's say that we've spoken to a financial planner and he's said he can get us a 3% portfolio. So we're going to take that monthly payment and we're going to reinvest it straight back into that vehicle. And you can see by doing that I'm developing quite a nest egg for them at the 15-year point. Anytime you're doing a debt consolidation, the whole reason they're doing it is because they don't really want to pay the cash anymore monthly. So we want to show them what that cash would otherwise be doing. And this is a great use of the presentation that you could do with a CPA or a financial planner in talking with them and trying to court their clients as well. So Dennis's question, why would you add the paid off debt to the loan amount? Aren't you increasing the loan amount to cover it, or did you already do that and don't want to duplicate it? So actually I didn't add that one to the loan amount because the loan is already increased by that much. So you have two ways to do it. If you wanted to, you could leave the loan amount exactly the same, so you wouldn't have to increase it by the $10,000 and then you would just check the box to add it. I didn't do that. I had increased the loan amount initially, so I need to make sure that in my closing cost detail, that very bottom one, you can see Payoff Auto Loan. This one is not added to the loan amount because I need it to come out. Okay, so now I've got all my investments done. I'm going to choose net worth because I definitely want to be able to see this in action. You can see that the payoff debt one has obviously got the best net worth over time. And even looking at the total interest in MI paid, it's still, the payoff debt is still better than the current because we're refining them to a lower rate. But I'm going to choose net worth and then continue on. And I'm going to go and preview this so we can see what the report looks like. All right, so obviously we've got monthly savings on both of these guys. The payoff debt one, we're saving a lot more money because we're not responsible for that additional $250 car payment. When I'm guiding my client through this, I'm going to point out two specific areas. One is going to be the more info section at the top left. And I'm going to take them over to that reinvestment strategy area so that they can see exactly what this money is doing over time. And I probably want to highlight this so they can see all of it. And then I'm going to take them over to the payment breakdown so they can see exactly what's part of each payment. So you can see when you hover your mouse over it, it breaks it down. Now, the auto loan payment is considered in the escrows category for this one because it's just an other field that we allow you to rename as you see fit. In the rate and term, obviously, we've got, we're still responsible for the same amount of auto loan payment, but we're reducing their monthly payment, so we're reinvesting that $83.84. Same thing when we come over here. We've now got lower escrows because we're not responsible for that $250. And we've got a bigger investment payment going forward. All right, so hopefully that takes care of it for you. There's another question. Is there a way to itemize the credit cards and stuff before paying them over time? There isn't yet. We will be building a full debt consolidation report into Edge. This is really more of a workaround than anything. So we try to make Edge as flexible as possible so that you can use different fields for whatever you need to use them for. So this presentation in particular, Edge wasn't really meant to do this, but we figured it out and we made a way for it to do it. Now, one thing to keep in mind is that this will not account for the interest that they're saving on those debts because we're not earmarking those as single debts. So keep this in mind. We will be adding a full debt consolidation report later, but this is a good workaround in the meantime. All right, Rick's question. As you are creating the video, can you click into the More Info tabs? You can, but it's not going to record your clicks. The video recorder only records what comes through the webcam. Now, that being said, whatever state you leave the report in when you close it is how the client's going to see it when they open it. So, for instance, if I wanted to make sure that my client saw this reinvestment screen first, I would close out this tab right now. And I know that, and I'll do it for you. I'll generate the link. And then I'm going to open up this link in a new window so you can see what it looks like. When I open this up, it's going to open up with that more info section already popped out. So any highlights that you have, any pop-outs that you do, that's how it's going to appear. As long as you close it with all that stuff open, it's going to appear like that for your borrower when they click on the finalized link. Shannon's question, as we see the accumulation of income in the analysis page, why doesn't Edge show it as we see it? It doesn't show very clearly on this chart. I'm sorry, I don't understand the question. Oh, well, actually, I think I understand what you're trying to say. And really what it boils down to is what we're seeing in the analysis screen is this reinvestment grid right here. So that's why I recommend popping this out for your client ahead of time, because this is going to show that full detail of what's going on here. Now, also keep in mind that when you do a customization, like we were showing earlier, the payment here is going to have a button that says custom. So when they click on that, it'll actually show them the customizations that you did. So in this case, I didn't customize these. I didn't save my customizations when we were going through it. So it's showing just blanket payments for the life of the loan. All right, so let's get into a couple more. It looks like there's no more questions there right now. So let's get into just some basics on video production. We've got about 20 minutes left. So for those of you who haven't tried to do any Edge videos yet, the first thing you need to do is you need to set up your camera and your mic. Now in order to do that, go to the Add Audio Video section. This is going to bring up your report exactly the way you left it, just like I showed you. So I'm going to close this out for now. And then I'm going to right-click anywhere on this presentation. This is going to get me to my flash settings. So right-click and hit Settings. Now it's going to ask you for things like privacy. You want to make sure to allow the camera and click Remember so you're not constantly nagged by this message. The folder setting here, I just leave it on Unlimited. It doesn't really affect the presentation at all. But you do need to make sure you've selected the appropriate mic and camera. So if you've got a webcam that has a mic built into it, you can hit the drop down. You see I've got a bunch of different mics on here. Because I'm using Chrome, I choose default. It makes it easier for me. So whatever mic I have plugged into my machine, it's automatically going to select it for me. But you can see I have a bunch plugged in right now. So technically, if I wanted to use the mic from my webcam, I'd want to select my webcam as the microphone here. Now, when you get to the webcam area, you should only see one of these, but I happen to have an integrated webcam on this laptop too. So make sure you're selecting the appropriate one. If I select my integrated cam, it won't show anything right now because my laptop is on a dock, so it wouldn't be visible. So I need to make sure that the correct one is showing, and then hit close. Now, the first time you run your video recorder, if you're in Chrome, you're going to get a message across the top of the screen. And it's the exact same color as this bookmark bar, so you may miss it. Watch out for this. The message is just asking you to allow the mic and camera. But without clicking it, you won't see your image come through in the video window. So if you're running in Chrome and you've tried to open your video and you don't see yourself in the video window, it's probably because that stupid bar is up at the top and you just need to hit allow and it'll start functioning for you. Again, this is only in Google Chrome. In Internet Explorer and Firefox, neither one do that, or Safari for that matter. So you won't have to worry about that. But we do recommend Chrome for most of our Edge presentations, and the reason is it's got Flash built into it, so you never have to worry about updating it. It's automatically going to update for you. All right, so some extra tips here. Once we've got our video ready to go, we want to bring up the record message button. And by doing that, we should see ourselves in the camera. There we go. So now that I know I can see myself in the camera, I'm ready to record. You can see I've got a recording button right here. You've got a play, pause, stop, or trash can. Now, if you've already recorded a video and you want to come in and delete it, you'll need to do the same process you did before, which is when you go to the Generate Link area, you're going to hit Add Audio Video. And then you're going to, when this comes up, you'll hit Record Message and then hit the trash can. That'll get rid of your video entirely. Now, I should also note that you can also just record a new one, and it will record over the existing one. So the only reason we have a pause button here is so it won't do that. So if you're in the middle of recording and you want to pause, then resume recording, it will append the two videos together. Whereas if you come back and just try and record again later, it's going to overwrite your original one. Now, some notes on this. Let me close this out here. Some notes on video recording. One thing, make sure you've got everything turned off. Turn off your phone, turn off your ringers, make sure that Skype isn't on, make sure you don't have anything that's going to jump up at you in the middle of your presentation and throw you off course. Close your door, close the blinds in your office. If you've got a lot of light coming in, it's going to flood out the background, so close the blinds, close the curtains, whatever you got. Then you want to make a bullet point list of the things that you want to cover. So remember, you want to try and keep your video under about 2 minutes. So you're going to use very, very cursory information. You don't want to go into too much detail on the video, but you want to mention who you are, what the purpose is of you doing this presentation, explain a little bit about the programs that you're offering here, and then urge the customer to click on the more info buttons during the video. Then you're going to give them a definite call to action at the end and close. You don't want to go over about 2 minutes because people kind of have a short attention span when it comes to this stuff. So keep it short and to the point. Make sure there's a call to action at the end. Take that bullet point list of items that you're going to talk about and stick it right behind your camera. That's going to help you to keep eye contact on your camera the whole time so it looks like you're talking directly to the client. If you don't do that and you're having to constantly stare back at your report or stare down at notes, they're going to be looking at the top of your head for most of the presentation. So keep that in mind. Rick's question, can you hit the More Info tab while your video is up and recording? Can you show me this? I tried it before and it didn't work. Well, let's see. It won't have any effect on the presentation, but we can certainly try. Yep, it does work, but again, this is not going to get recorded into your presentation, so there's really no reason to do that while you're recording. It's really only covering what comes in right here. So don't even bother navigating the report while you're doing your video unless you absolutely need it for you so that you can talk. However, I would say get your report in the state that you want it to be in first, highlight all the things you want highlighted, pop out whatever you want popped out, and then record your video, knowing that your client is going to see it that way when they open it up. Just remember, it's not going to remember your mouse movements. It's not going to remember your when things get clicked. It's just going to see the final copy of what it looks like at the end. All right, so when you're done recording, just hit stop. This is automatically appended to your link, so if you send this link out to your borrower now and they click on it, it will pop up the presentation as you left it with your video playing. Now we've also moved the video player to the middle of the presentation. It used to appear on the lower right. We've got a lot of feedback from people that said, you know what, I'd really rather it appear in the middle here. So we moved it and it's now right in the middle of the screen for you. Now your borrower can move that around, so you might want to indicate that during the video. Tell them they can left click on your name and drag the box around and it'll uncover parts of the report that may be covered. Tony's question, are there plans to do video and be able to highlight things in the presentation? That would sure help. We've been looking into it for about a year. It is currently not possible in the Flash platform. That involves tracking mouse movements, and these are in terms of coordinates on a page. So the amount of data that would be required to do that would make it so the report is ridiculously large. It would take 10-15 minutes just to download the report. So it's not possible inside Flash right now, but we are considering other alternatives in terms of using other screen capture tools that could potentially be built into Edge. And if you've got an alternate tool already, say for instance you're using Jing, we've got a comment from Jimmy Wakamoto saying Jing is great for that. Jing is a free tool. It allows you to record up to 5 minutes for free of screen capture recording, and then they host the file for you and just generate a link. So you could potentially send them both. Send them your Edge link and the Jing link. The Jing will show the full walkthrough for you, and then you can send the Edge link if they want to forward that around to their clients, and so that they can actually navigate the different more info sections on the report. Because with the Jing they won't be able to. It's just a flat video. Now, other tools that work for that, Camtasia is a great tool. I use it for my screen capture recordings anytime I do one of these training presentations that I put up in the support center. I'm always using Camtasia, which is from the same company, TechSmith, as Jing is. And both of them are excellent tools for video recording. Camtasia is a little costly, so keep that in mind. But it does give you a lot of editing capability that Jing does not give you. And Jing is spelled J-I-N-G. I want to say you can get it at jingproject.com. Yeah, it takes you straight over to TechSmith's site. Okay. So you can see there's a couple of different options. There's Snagit, which now has Jing built into it. If you have the older copy of Jing, it's still called Jing, but now it's actually built into Snagit. What Snagit is it allows you to do screen captures that are still pictures. So the Jing part will do the video capture. The Snagit part does the screen capture for whatever you want to do. In fact, I run Snagit, and I'll show you what that looks like. So if I wanted to capture an image from anything that's showing on my screen, it basically allows me to just draw a box around it, and as soon as I let go of my mouse, it's going to bring up the editor, so I can now mark this up. I can put arrows on it and all that kind of stuff. I can put shapes on it, I can put text on it, and then I can save this as an image. So I use this a lot when I'm testing the software and so forth. I'm doing screenshots for people. Very useful tool. And if you have Windows 7, you actually already have a snipping tool built in that has a very similar functionality. It doesn't have all the additional markup tools like Snagit has, but you can find this by going to All Programs, and then you're going to go into your Accessories folder, and you see that there's one here called the Snipping Tool. And when you click on that, it's very similar to what Snagit allowed you to do. You just draw a rectangle around whatever you want to capture. As soon as you let go, it brings up an editor, but you can see that the markup tools are pretty slim on this. You've just got a couple of different colored pens, some highlighter, and you can erase parts if you need to. But again, this is a great way to capture an image. Say, for instance, you need to grab an agent's photo off their website to put in your open house presentation, and they've got that photo locked down so you can't right-click on it and hit Save. This is the function you would use. You would use the snipping tool or TextMeth, whatever you choose to use, but you would use a capture tool to just drag around a box around it, and then you can save that as an image. So it gets around those security restrictions that people might have on their images. All right, so I'm not going to save that. All right, we've got about 7 minutes left, so if you guys have any further questions that you'd like me to address for today's presentation, let me know here, and try and get those specific to your questions. Shannon asked if we can show the snipping tool again. Absolutely. So in order to find that, you have to have Windows 7, and you'll know you have Windows 7 when you've got this arrow peak thing, which when you hover your mouse over different elements down here, it gives you a pop-up of what that looks like. You can only get that in Windows 7. So if you've got this functionality, you are running Windows 7. And you would click on the Start button, click on All Programs. You're going to click on the Accessories folder, and then click on Snipping Tool. Now, you can also right-click on this, and you can do Send To, and you can put it on the desktop, and that'll create a shortcut. You can also pin this straight to the taskbar. I'll show you what that looks like. Once you click that, now it's just an icon that I can always click down there anytime I need to snip, and it'll automatically pop up. But I use Snagit, so I'm going to remove that. So I'll unpin that from the taskbar. Now you can do that with any program that you're running as well. So usually you can see that I've got, like, for instance, my notepad is always down here, and the reason for this is anytime I need to take a couple of notes that don't require any kind of formatting, or I'm translating text for somebody, whatever it comes to, I like to be able to get to this immediately. Things like my log me in, I like to have all these down at the bottom at all times, so I don't have to go hunting inside the programs folder. It just makes your workflow a lot faster if you have these set up. All right, well, it looks like we are out of questions today, so I think I'm going to go ahead and call it a little bit early. Now, let me see, I did record this presentation, so by the end of the day I will have this in 2 places. One will be on our Mortgage Coach website under the Coaching Calls area, and you can get there by hovering over Community and then choosing Coaching Call Archive. This shows you all the past Tuesday calls and a good chunk of the Thursday calls. I've started putting these in the list now. I used to just overwrite it each week, but now that we're getting to the point where our QA sessions are more targeted on a subject, we are recording these and we're keeping them in here. So for instance, if you want to learn how to make that coffee report that you've probably seen through our marketing people, click on this guy. It's going to show you how to build that presentation, that Skip the Bagel presentation. There's also a training call on the 19th from Lori, and she showed how to build out different MI options in Edge. Great presentation to watch. If you haven't seen this one, definitely check it out. You're probably aware of all the different MI options, but your client isn't, so make sure that you are well versed in how to present these to your clients. But I will have today's session at the bottom of this list by the end of the day today, so if you guys want to review it, it will be there for you. Well, that said, guys, have a wonderful day. Thanks for joining me today, and I really appreciate all the great questions. Hope to see you next week.